I don't know. Tonight is funny, but okay. I was asking. I
Yeah,
mean,
I can.
all right. I don't know if we got the question I asked the other time. Is there any one of us who, you know, observe the charts and you? Okay. All right. Would you mind unmuting your mic and saying something, or we want to type? But whichever it is you want to do, let's know what it was you observed in the charts while you did that yesterday. Go ahead.
Stephen, I don't know, but I don't think I can hear you if you're.
Expecting to hear. So yes, you can go ahead to let us know what you observed. Yeah. Yes. Is this saying something?
No, I don't think he wants to say something. I don't know. Okay, he's having network issues speaking. Okay, he's typing it in the chat, so maybe you could
Or all right.
just type
So
what you want to say
yeah, yeah.
in the chat. Or okay.
Okay, so while he's typing in the chart, I think we just have to keep going because we are not having so much of time and we have a very short time to do so much. So yeah. I also was having severe I yes, literally can say we have everything under control now or way better. So that was essentially what we did yesterday. History of money, introduction to spot and futures trading. Not so much, talk on that. What liquidity was, the basic of supply and demand, and I think that was just everything that we literally talked about. And the assignment was about how people can go, observe the chart and look at the chart. Well, I don't know if you actually know what a chart is. I'm going to be opening you to a chart. A typical chart looks like this. I am going to be sharing the screen so you can look at that. So this is what a chart looks like. I don't know if you can see this tab. Yes. So most times on every exchange you get to, look at something like this. This is a Bitcoin USDT chart. You might not see it this color. I did whatever I did on mine to have it this way. So this is not part of our training, and now you can change the color palette of your trading canvas because that's not all there is, and that's not in fact anything about trading. It's just how you might want to have the color comfortable for your own eyes, and that's something you can find your way around. But this is trading view, and I remember mentioning trading view yesterday, and I also mentioned coin market cap, two important websites or tools that as a trader you just consider them as must have. They are must haves, right? So this is what a chart looks like. I want to assume you have never seen one, and that's the reason why I've just brought us here. Anyways, I'm going to be coming back right here because we'll be doing our analysis or talks around the basics of analyzing the markets, and then we go into trading on BitGet. to make you have a feel of what it looks like to do a typical analysis, a typical trading on spot and futures. So let's come back to this tab. Um, we'll start off with the most important part of trading. And it is called the most important part because this is the thing that really proves you as a trader. It's not so much about I can analyze the market. My predictions are always right. Trust me, when you eat trading, I've been trading not for not so long a time, very short time. It's been about 5 years now. Yes, it's been over 5 years now, right? I've come to realize something, and I would call them, daring truths that every one of us needed to be armed with as we join into trading. Trading is not what you should see as your active source of income. That's the truth. Forget what people are telling you on the internet. Forget it. That's the truth. Forget it. You would come to realize that harsh reality because your journey into trading is a graphical experience. It's not a linear graph. It's not a linear graph. It does not go straight like this. So it goes up and down till you have enough skin in the game and to survive for a long time. And by that I mean you can go that long and get so much profit off trading when it's not your primary source of income. That implies that you should have something you're doing. Maybe you're into content writing, you're into some form of video editing, you're into some form of financial analysis for some company, financial audit, you're into some forms of whatever it is, cyber security, front end development, back end dev, whatever it is a skill you've got, or a data analyst for some firm, right? Something is bringing something for you, and then trading is going to be like a passive income as it ought to be, right? So that way, in fact, you suddenly make so much than your normal monthly salary, you would not feel so secure that you want to quit, right? Because once something is coming in, there is a way it rebalances your psyche to just have trading as a passive income, and you would not be greedy because those are the two critical emotions that traders suffer from: greed and fear. I hope you are hearing me very well because that's important for us to state. And it's very, very important that you pay attention to that because I would bring us to coin market cap and you'd see there's two emotions. Fear is the extreme end, and then is the extreme end on the left. Greed is the extreme end on the right. There is a way you travel with into trading that you would not be caught in between one of these, right? Either it is fear or greed, and that's where risk management come into place. Now, you might be asking yourself, what is risk management? I would break it down, and of course, you would see why risk management matters. Risk management is a trading asset that every trader needs to embody. It simply brings clarity in the course of your analysis, your course of your execution, and the course of your trade conclusion. So, risk management is that clarity, will I call it a catalyst or a clarity lens that helps you to see the market beyond the deception of emotion. Risk management is the critical factor that help with decision making in the face of prior. Risk management is simply whatever it is you put in place to define your move, analyze your move, and you know preserve your portfolio. That is simply what risk management is. Whatever it is that helps you to manage your capital well, whatever it is you are doing is risk management. Now, the truth is this: if you go do your research, statistics makes it clear that only 10% of traders succeed. And why? Because in the first 1 year, the majority of them have blown their accounts, they've lost their money. And the reason is not because they are so bad at analyzing the market, but the truth is they are poor risk managers. They do not know how to manage their risk. And it's very easy. See, I'm going to tell you this. Don't tell yourself, I know how to manage risk. You don't know how to manage risk. Let me just say this to you so you can tell yourself that I don't think I know how to manage risk until the situations prove it right. I can give stories, personal stories, on and on and on, and you would see that. See, The journey of risk management is not something no one learns. I mean, no one learns in a day. And as much as I've learned so much about risk management, I still see that it's something I have to gradually begin to learn over time. Very, very importantly. So that is what risk management is. Whatever measure, whatever principle, whatever rule, whatever step, whatever input you have put together in place to ensure that you're effectively managing your analysis, you're managing your portfolio, you're effectively managing your decision, you're effectively, sustaining your profit more than your loss is risk management. So whatever risk management is to you, you can definitely deduce from all this I've said. Risk management are principles, measures, discipline, and um, guides that you've put in place to define, to you know, confine, and in a sense to refine your risk on every trade you are taking, in so much that your capital is not lost. Because the truth is this, you must learn trading is a long-term gain and you live to trade another day. And that's why if you see some person saying, let's say you have a $10 account, don't compare your $10 account with someone who has a $50 account or someone who has a $1,000 account. The person having a $1,000 account can afford to risk $10 on a single trade. And you'll see this practically when we come into the trading session. And that's why you must not compare yourself with that person who wants to just go open a leverage trade of a futures trade, right? In this case, a leverage trade of a 20x because the person wants to make a $200 profit because of he can afford to risk $10, but you cannot afford to risk $10 because $10 is the whole of your capital. And so if you're risking $10 out of your $10, that means you're willing to risk 100% out of your 100% portfolio. That is not being financially smart, right? And so when you begin to understand the principle of risk management, you would get to know why many traders don't survive trading for a long time. But once you have come to this conclusion, you would know that risk management is the ballgame of trading. And in fact, according to some statistics, trading is 70% psychology and 30% analysis. In fact, some persons would argue saying it's 80% psychology, which is how much your mind is balanced, how much you have your risk appetite curtailed, how much you have your management, I mean your risk being effectively managed, how much you have your discipline around you. And so that is the 80%. So the analysis you want to do today is not a real deal in trading. You literally have to journey through the cycle of battling yourself. When you're trading, you battle with self-doubt, you battle with uncertainty, you would battle with greed, right? That's the truth. And you would come to the point where you would have your edge. So you would know how much you can afford to risk. So that is all there is about the definition of risk management. So why is risk management important? Because it protects you from taking a bigger hit on losses. I remember a time there's been like 3 years now, I got a particular coin. This is spot trading. So when you buy a coin on spot, you are literally holding these coins. I'm going to be showing us on BitGet in a moment of time. And this coin is not, it's the name of the coin is Tom, TAUM. It's not in existence now again. I'm talking of about 2, 3 years now. It should be in existence, don't get me wrong, but because they had very terrible team behind them. And so those are also some terrible nuances you have to come to deal with when you are researching on coins to buy. You have to ask many big questions. And in fact, I have friends that you can also call to check these coins with you because you trust me, you cannot know it all. And that's why people a great must have or asset you must have around you when you're joining in investing in this very, very funny quagmire of trading called crypto. So I bought this coin and I cannot remember how much I used in buying it. Some few US dollars. And I think maybe about 50, I can't remember. This coin went to a couple of, figures, not so much. And then I was looking at it and I was like, okay, I think it's time to take off the profit of this coin. And I was like, okay, no, I want to wait a little bit more. Um, Eventually, this coin later was dropping terribly. I was forced to take it out. I don't think I took it out in a profit, and the capital was not as it used to be anymore. That's very funny. It's like from a $50 investment on this one coin. to maybe go to about $500. I cannot remember, not too much and then it suddenly began to drop, and I didn't take the profit, or maybe I just later sold it at a very ridiculous profit, or not so much in capital. So now there is something about risk management that should have been in place. What is that? Whenever you've invested in a coin that is having high risk, that you are not so sure of the team members behind those coins, and you do not have many checklist ticked in your checkbox, because trust me, when it comes to risk management, you need to build a checklist. So are we having a solid team behind this project? Tick. How long have they been in the crypto game? More than 3 years? Tick. I mean, those are the things you would check. There are charts. Can I use the charts to understand the future of this market? You'll check. Okay. How long can I afford to hold this? If it's a spot coin you're trading or a futures coin, how long is my, how long do I think intrinsically I can hold on to a trade and I would not lose my steez, like they would say it. Maybe just 48 hours, and you'll check. So if all of these are in place when you are approaching a spot trade or a futures trade, you would apply them and you'll stick by your principle. Personally, I've seen a trade that, you invest $20 and it went above $10,000. I mean, $200, sorry, personally. Trust me. So, yeah, in spot coins, it does not come like that every now and then. And the reason why it does not come like that is because I'm not in a cycle of people who go about rock pulling people. I have people who do that, but I cut off myself from them. So those ones, they can literally move a $500 account to $200,000, $100,000, and they're the ones that you would see on, Twitter making a lot of posts and talks about the houses they built. But they literally did that, stealing off people's neck, because they would push some coins that they created, and make gullible people to get into them, and then the profit of their heads. They do that a lot. But honest work of investing that amount of money and seeing it go that height is a proof that honest work truly pays. I don't know if you understand what I'm saying. So risk management is a very critical thing that anyone with financially literate cannot afford not to have when it comes to you. um how do I say this? When it comes to you, um journeying into financial abundance, let me put it that way. And it's important for you to know something. The journey to financial sufficiency is not a game of you are contesting with one person. It's about you and you. And I'm sitting so much on risk management because this is the thing that would help you to succeed for a longer time. When it comes to trading, you must build your risk management toolkit. Please, am I communicating? Do we all get that? Please, do we all get that? Hello. Do we all get that, please? I want to get that we're on the same page. Okay. Can we see it? Can we see, hear me? Hello? Please? I'm going to, okay, let's do it that way. Please, if you've not signed up on BitGets, I'm encouraging you to please do that. Can someone drop the message? All right. Okay. I'm going to be using a different login to do that. I'm going to share my entire screen. I don't know if you all can see the screen. Please, are you seeing my screen? Can you all see this? I need us to comment, please, and talk. I need to know what we are seeing. Can we see the
Yeah, I
screen?
can see your screen.
Okay. So on BitGet, you literally have so much icons, right? But if you look at the lower bar, you'd be seeing right there home, which is the first icon on the lower bar. Just in market. This is where you get to see so much of the market opportunities that BitGet has created. There is this market, there is this is the open market where you see major divisions. You have in the sports, which is right here below. I don't know if you're seeing the spot. You have in futures, which is the next column, and you have in margin. In essence, I would explain the difference between spot and futures. So when you talk of spot market is a market where you get to buy a coin um, at an instance, and you have the coin in your wallet. You're not trading a derivative, you are actually having the coin in itself. That is a spot market. It's like you are taking 100,000 naira to the market to buy oil, 25 liters of oil. When you pay for that, you carry your oil. That is a spot market. It's a spot. It's a spot trading. But if you're in your home and you are using 100,000 naira to go to um, what app do we have there? Let's say Bamboo, or we say Takam, or we say different apps, right? For spot for stocks. And you bought Okomu oil. You bought maybe 20 shares. Well, you don't have oil, right? You don't have the spot like commodity, but then you have a derivative that is dependent on the actual price, an increase in price of oil. So that is more like a futures market, and that's the best picture we can give of a futures market. I don't know if you got that. So yes, this is just a basic difference. Spot market is where you get the coin at the market price or in the crypto market on the spot, inferring that you literally have the coin to yourself, which you can move from one wallet to another wallet. But the futures market is that market that is allowing you to trade the derivative of that exact coin without you having access to transfer the coin or have the coin in custody, but you can use your dollars to take advantage of the price movement with leverage, right? That's a futures market. Then the margin is is a version of futures market that allows you to expose a sizable unit of your money on spot with the expectation of the movement and price also either up or downwards for you to make. But then when you click on market right here in the lower bar, you have access to the markets and you have on-chain opportunities and just so much. Meme coins that are being newly created on the on-chain market. Meme coins. I talked about meme coins yesterday, coins that are just being created randomly without any real use cases. They are just for fun or for community excitement, funny coins like all these Doge coins, Shiba, Pep, whatever coin there are, all of those coins are meme coins, very important. But then beyond the on-chain coins, you would see stocks. So these are new development on BitGet. You have Tesla, you have Nvidia, you have Circle, you have Apple, you have Microsoft, you have MicroStrategy. All of these are US stocks. So looking to trade future stocks, you can do that on BitGet. That's the way we are going to. If you need to trade spots, you don't need to click market. You just need to click trade, which is the third icon, right? And then you would see spot. But if you want to trade futures, you literally see futures. So if you want to trade spot or futures, you see spot, you see futures. So if you're not having money, let's start with trading on spot. Under assets, you have the categorization of how your whole fund is. Under overview, you would see where your whole funds are and what they look like and how you have categorized them. Yes, so you can have some funds under OTC, you can have some funds under on-chain, you can have some funds under futures. As I'm moving them, I hope you're seeing that, and under spot. So make a trade on spot. We need to check. There's no money on spot, right? There's no money. Open that so we can see there's no money on spot. And then what we have to do is we have to transfer some funds to spot. I'll click transfer and you would see me doing this. I'm transferring money from futures. We have some funds there. We'll transfer this 20 US dollars to futures, to spot rather. So 20 US dollars has been successfully transferred to spot. We confirm and then we head back to spot. And of course, if you look closely enough, like somewhere around here, like I don't know if you can see this, you'd see available and then you see 20 USDT. Now, before we go ahead to take a buy position, I want to confirm if we can hear me. So we can begin with analyzing the market on BitGet and then taking a trade on BitGet on spot. Now it shows us how to buy and how to sell. Please, can we all hear me? Okay. All right. So let's start with analyzing the market. I don't know if you are seeing this candlestick like icon that is dark in color somewhere around the top right corner, close to the hamburger icon. This one, this I don't know if you're seeing that. I would like it if you can also open your own chart. Okay, great. And be practicing as we are looking at it. This is a coin called linear. Apparently, what you are seeing is you're seeing the time. Look at this: 1 minute, 15 minutes, 1 hour, 4 hours, 1 day. Those are critical times, which implies that when you click on 4 hours, one candlestick in this particular chart represents 1 hour. If you click on 1 day, one candlestick in this particular chart represents 1 day. You would see the candlesticks here are way more smaller than the last one you saw, right? These ones are 4 hourly chart candles. Then we click 1 hour, you see we have more candlesticks, which implies more data. When you see more candlesticks, you have more data to read meaning into. Anyways, this line that you are seeing that is growing alongside the movement of the price are what they call indicators. Now, if you look closely, you will see MA5 at the top there. You see MA10, MA20, which is moving average. It's called an indicator. Moving average 5, moving average 10, moving average 20. Some persons only trade the market with indicators. And what do indicators do? They just tell you and give you a preemption. I don't know if that's right, but they give you they preempt the market for you, telling you where the market could likely buy from or the market could likely sell from. I would like to state this very clearly that the market operates on the dynamics of supply and demand. If the market has been dropping for a long time, there's a high tendency it could start buying upward again. If it has been going up or buying, right? So when we say the market is buying, that is it's going long. The market has been going long for a long time. It's as every high tendency it will come down. One of our proverbs in this part of West Africa would say, whatever goes up will come down. And it's also is applicable in the market, but not all times. So you don't have to be caught off guard because sometimes it will keep going up for days and days and days. And you'll be like, it's about time it drops. And you go short. And then those who are the market makers and manipulators of the market will be like, no, it still have to go up more because we want to still manipulate the market. So that when it's to drop, you wouldn't know when we'll drop it. Anyways, it happens. That's the truth. So don't be shocked when you experience that. But of course, your risk management will always save you. I mean, now this is important. I don't know if you're looking below. So under trading view, I mean, under what's it called? BitGet, you have so much indicators. So look right below. You're seeing MA, right? You see that part that I'm tapping? Then you have EMA, you have bowl, which is Bollinger. I'm tapping on bowl. You would see that will be added. Look at it. It's added. There's a bigger part. Bollinger. You have an SAR, right? AVL, volume. Sorry, that's the volume indicator. Taking them all out. You have in MACD. So you have in the RSI, which is already there. This is the RSI. I just took it to a full mode. Let me restore back. So you have in the RSI. I took it out. You have in ROC, which is the rate of change. So you have in stochastic. This is stochastic. Also an indicator. So people use indicators, but you need to go learn that on yourself. We're not here to do indicators. But then let's just do analysis using demand and supply, which is the basic we'll be introducing us to. And maybe I'll just use the RSI, which is one indicator I think is still very much good. All right, look at this. Let me take out rock and add RSI. So now, if you notice something, there are different types of candles. There are full body candles. I wish I can show you this, but then look at this candle. I don't know if you see where my cursor is. This is a full body candle. That's one type of candle. Then there is this type of candles, this small ones that looks like a cross. I don't know if you see those ones right there. In between the green and the red candle, this small one that looks compressed. They're called dojis. Those candles are called indecision candles. The candles that signals the market wants to change direction. Not all times, but most times. Now, this that you saw happening right here is what they call a candle wick. It happens when the market is signaling exhaustion. It could be seen lower at the lower part. Look at that. Are you seeing it? it signals exhaustion. Maybe it's been selling as it's been doing from this point to this point. Oh my God, sorry. Let me just use the full screen anyways. So maybe it's been selling from here. Let me use trend line. I hope you saw I picked that. Maybe it's been selling as it is doing, right? Okay, let me flip it. So I don't know if you guys will be able to see this. I want to. I'm thinking of flipping it. Okay, I don't know why it's not flipping, but I think that would make it better for us to use. I'm thinking of using this so that we can be used to using it. Right. This is not what I'm expecting it to do. Sorry, and I don't want to use trading view. So apologies, please. Okay. Hope you're saying I'm drawing it. So literally from this particular point, right? From this point, market has been selling from here, moved. Let me use a, okay. It moved from here, point here. It moved to this point. Can I just, yeah, from this point, it moved to this point, right? This particular point. And when you go to this other second point, right, you literally saw candle wicks. That's what they call candle wicks. Um, yeah, you have candle wicks, right? The candle wicks are only going to be telling you that the market is getting exhausted and it could change direction from the previous direction it already initiated. It's initiated a sell direction, but then the exhaustion shows it was about going upwards. And so this point, right, this point from this point to this other point is a supply zone. What makes it a supply zone? Because if you look at it in previous times, let me pick the trend line again. It's when the market, you know, was seen around that same point in previous time, which is apparently I'm making reference to this, the market, sold. And you need to go check, previous order times. Well, we don't have so much data because it's a newly listed coin. This is how best and how far we've gotten to. So that means at this point, the market sold when it, you know, look at this again. From this point, it sold. From this same point, it sold. And so it's a supply zone of a sort. And it's best to use a rectangle to represent that. If you draw it like that, you would see what we're making reference to. Yeah, there you go. So you have a supply. That's a supply level. That's what they call a supply level. A supply level is a selling level. And then so this is expected to be a point where the market, when it gets to it, should sell. But this time around, when it got there, it broke above it, which means that the buying prayer from this particular level, and this is the level I'm making reference to, the second level. The buying prayer from this second level, of course, you can change the color. When I tapped, you'd see this pop-up icon, this one. I don't know if you're seeing it. Just brought it up. Tap, you'd see. And you can always change the color to maybe, red, or maybe change the color of the inside box like that. The supply level, I mean, that was here at this point, right, it got broken because the demand level, the buying level here was strong enough. And so whenever the market breaks above a supply level or a demand level, in this case, that's broken above a supply level, which is this point where you expect the market, since the first instance, the second instance, it has proven to be a key point where the market always sell from. Whenever the market breaks above such kind of level, it comes back to test it. By testing it, I'm going to be showing what I mean by that. So look at the 15 minutes candle. So you see, this was the point it broke it. I don't know if you saw that. Let me show you. This was the point. This point. Are you seeing this? Please, can we all hear me? You need to unmute your mic. This is a practical session and you need to talk. Are we all hearing me, please? I'm not going into deep things about ICT or liquidity, but just the basic introduction. Are we seeing this, please?
Yeah, I can hear you, but um, most of the markers you're using, I I'm a bit confused. I don't know.
The what?
Is it the markers you're using to explain? Right, I have to zoom in because I'm using PC, so it's like
Oh,
really
ah.
hard
And I'm using
to
mobile because
follow.
I thought it's going to be easier for everyone. They will be connecting with their mobiles. When I log in on PC,
Okay. I think mobile is fine. What are you using to indicate? Is it that black dotted line or
yes, I'm
something
using
else?
this
Because
black,
it's
this one, this one's
confusing.
I touch. This, whenever I touch, that's when,
Okay.
I don't know if you are seeing the touch, but I
Okay. I
think,
think it's fine.
are you seeing this cursor, this touch,
Yeah,
whenever I touch? Okay,
yeah, I can see it now. I have to zoom in
okay.
a lot, so yeah, I can see it. Yeah.
So, I don't know if you got it from the point where I was talking about the fact that this line, this, kind of orange line is the demand point where the market was buying from. And then this other line here was the supply point or the sell zone where the market was selling from. It sold from here the first time. I mean, it sold from here the second time. That's why I cycled those 2 points. That made that point to be logical enough for me to infer it's a supply point, right? And my expectation would be that when it trades into that supply point, it should sell. Was I was going to explain that once it has broken that supply point, it will come back to retest that point. And that's what this has just come to do. When it broke it, this candle wick that you're all seeing, this one here, is only coming to retest that point, and that point is the next buy point. Whenever a supply level fails, it will turn to a demand level, and whenever a demand level fails, it will turn to a supply level. So because this supply level failed at this point, it will become a demand level. So if you want to take a buy, you would be thinking of taking a buy around this point. Why? Because whenever a supply breaks, it flips to a demand. Whenever a demand breaks, it flips to a supply. But then that's just one of the basic principle of trading. Anyways, I was just going to show you that understanding the basics of supply and demand is enough reason to know how to trade. Where is the supply level? You got to mark this point out. Let me share this tab entirely so you can see what I'm talking about on a different tab, and then I'll come back to place that trade quickly, and then we call it a close for the day because it's already um a long day talking. Okay, all right. So look at these charts. If you'd ask yourself, I don't know, this looks big enough, and I believe everyone is seeing this. Can we all see this that I'm showing? Like, are we seeing the screen?
Yeah, I can. What are you showing? It's just showing your chart.
Oh, maybe
Linear USDT.
yes.
Are you still stuck on one page? Okay.
Not linear. I'm using the okay. Let me stop presentation on this one. Oh,
Oh, okay.
are we now seeing this?
Okay, yeah.
Okay.
Yeah, I think this is better.
All right. I'm going to go back there where we're going to place in the buy and sell. She knows how to buy and sell. But then I just wanted you to look at what demand and supply means. By looking at this chart, it looks too wide. But then you can literally just take out this toolbox, the rectangle, just come right around this brush icon. You would see, sorry, can we see me? Yeah, you'd see where you click on the rectangle. And with that, you can ask yourself, where is the market buying from? Where is it selling from? Just by looking at it purely. So I want to draw this point first, right? Sorry, let me just take this off so you can understand. I just drew this point. When I drew this point, I was like, why I drew this point is first because I noticed here it's sold, here it's selling. Let me just take some icons and put it right there. So that's point one. My first reason by looking at it from a distance. Second reason, my third reason, and I'm like, okay, fine. This is a good supply level. Then where is my demand level? Just by looking at supply and demand, I can literally mark different points for my demand. I could mark this point. The market is buying from this point. I could also go ahead to. I will definitely love to change the color so I can know that psychologically. I often use the buy as the green and the sell as the red. So let me just use that the way I normally do so that we don't get confused. Okay, so yeah, something like this. Great. So I have the demand already, and I can actually go ahead to just Control C and Control V, take the same box and mirror this point again and say this is the demand level. So, yeah, what makes the demand level? The key simple things, a bullish engulfing candle. I don't want to talk about that because those might be sounding eye ending, but I'll make you see what I mean. Whenever you see a candle like this type, where you have the green candle bigger than the selling candle, that is a sign of a demand level, especially at a point when the market has been selling for such a very long time, like this. Whenever I see the market selling down for a long time, and suddenly spot this candle at the tail end of such move, likely that's a demand level. You mark that point up, mark it up. I don't want to give so many talks, so we don't get confused of the advanced analytical perspective. But then this is just simply marking demand and supply. So whenever the market now breaks above a supply level, as it has done here, look at this point. This is the point where it broke above the supply because this is supply. This is the peak of the supply. The supply when it broke above it, like when it broke above it like this, it'll come back to retest it, and that's what this just has done. It come back to retest it. That is, come back to beat it by. It comes back to touch that point, and then it keeps going. And then this supply level now flips to become a demand level, right? That's what has happened right there. Understanding these basics will let you know how you can take a trade. So literally from this, you can tell yourself, I'll take a buy from the point where it's coming back to flip it, and my my stop loss will be at the lowest point relative. This is a low point. This is a high point. So well, you would understand this when you use a line chart. I just don't want to bring too many things to your mind in this one class. But then I most times use a line graph, not a candle chart. Line graph so I can see the highs, the lows, the highs, and of course it helps me to just identify highs and lows, and see the market in a more white and black way, right? Very pure and clean and not too much of information. So yeah, this is the point you'll be thinking of using as your stop loss if you're going to be taking this trade, and your take profit will definitely be a 2-to-1 reward. So you want to check that if your stop loss is right here, you can calculate where your take profit is by understanding the 2-to-1 reward ratio. If I'm drawing this up, I'm telling myself 115,400 is where I'll take my profit, or the next point will be 3. If it's 3, I'm going to be saying yes, at 3 reward to risk ratio, my take profit will be happening at 116,400. Very simple. Anyways, that's not where we are going to. I want to show you how you can buy and sell, just the basics of buying and selling. Other things about trading in details, I think you will get to learn in other classes. Will be Austin, if you don't mind. But then this is just what it is using demand and supply. You can apply this on a 1 hour chart, and of course you can apply this on a 4 hour chart, marking out supply and demand zones, and then reasoning around why the market is buying from here and selling from here and buying from here. So this this for instance, then is the demand zone, and of course when it got broken, you can see it's a demand. The market bought here, it bought here, and let me just make it bigger. So look at that. When the market eventually broke through down, right, it made it to be, it turned this place to be a supply level. So when it broke, I don't know if you saw this, a demand. I don't know if you got that right. So it demanded here, and then just to make you see that well, it demanded right here again. But then this time around, when it was going to come right to, you should expect it to buy, right? It bought, bounce off, bought, bounce off. But then this time around, it broke it down. When it broke it down, it turned it to a supply. That's why you are seeing this supply literally happening. When it broke it down, it retested and then it sold. It came back, it sold, and then eventually it broke, and the cycle continues like that, like that, like that. Very simple. Anyways, let me quickly show you how you can, yeah. Let me see if I can just share singular screen. Um, yeah. Let's come back to trading. I don't know if you are seeing this once again. Let's take a buy position on a coin. Let me just use Solana. Let me buy Solana. So the current price of Solana is 239. Of course, before you hit buy, you must have done your analysis. You must have asked yourself, where am I going to be exiting this trade? Where am I going to be um, taking my stop loss? For instance, if I want to buy Solana at this point, I want to buy here. And for instance, I've done my analysis. I want to take my profit at 240. I believe it's going to rise from where it is at to that point. Of course, you must have journaled. Analysis is number one. You write a risk. Number two, how much am I willing to risk for this trade? From risking the old 20%, the old $20 on this account, how much will be my stop loss? If I'm just doing a 2% um, risk, that implies that I would, whenever I do my math, whenever I come to do my mathematics, I simply want to say a 2%, which is 2 divided by 100, multiplied by $20 means I'm only wanting to risk $0.4 on this trade on spot. And so what I want to do is I get back to the trade, right? And I tell myself, okay, fine. I've analyzed the market. My perception is it will buy all the way to 240. Yeah, 240 here. 42.